Howdy, Jacob here. Today we're looking at DXP Enterprises in the trading companies and distributors industry. Just under 800 million market cap, just over 1.2 billion enterprise value. Growth is relatively flat over the last 10 years, has declined pretty significantly from 2014 to 2016, and then since then has grown at probably about 5 to 8% year over year growth. So pretty impressive. And that's inclusive of a pretty big decline from COVID. Their gross margins are about 30% now, with an operating margin of 8%. So not very large margins there. Return on invested capital, not very significant. Income statement shows a heavy amount of cost of goods sold, a little bit sales, general, and admin expense. Still hitting the bottom line though, which is good. 173 million cash-like products, 6 million short-term debt, 521 million long-term debt. So they have been leveraging themselves quite significantly, over doubling their long-term debt in the last 4 years. That, let's say, 500 million compared to their free cash flow is going to be about 5 years generously. So if they're able to consistently produce this 100 million in free cash flow after all these acquisitions, then 5 years of free cash flow for their debt is still a good amount. Probably going to have me allocate 20 to 30% to debt reduction in my projections here. So let's get right to it. Revenue growth, I think I'd be pretty comfortable with. I mean, they've grown a lot through acquisitions recently, and it's been over 100% of capital allocation. And so if I assume maybe 40% capital allocation goes to acquisitions, probably not going to be seeing more than 5% revenue growth. With the debt that they have, I'm pretty comfortable with a 13 PE. Margin-wise, very low margins here. They have been higher with this with the acquisitions, so pretty comfortable there. But then, let's see, about 8 million for 1%, and they have been buying back shares. But again, I'm saying a bit of money goes to capital, a bit of capital allocation goes to debt reduction, so maybe minus 1%. And it needs to fall 44% before you get the return I'm looking for here. So interesting business. A lot of growth through acquisitions recently. I don't necessarily like that as much, but not terribly far off. Fall a little less than in half before you get the return I'm looking for. So either way, hope you enjoy the video and have a great rest of your day.